better move, you'd have thought, to my stop to break even, or to kind of capture that profit. Well, no, it kind of comes back, tests again, we break it by a point, point and a half, and then it really goes in my favor, and it turns out to be a great little trade. But if I'd brought my stop to break even, I'd have been out with a loss as well. Similar thing here, let's say we're kind of coming up to highs for the day. It's a good place where a lot of traders might be thinking to kind of re-enter short and so on. So let's say you're kind of trading short here. This little trade, this moves nicely in your favor. All of a sudden, it kind of retraces all the way back. It goes a fraction above, about a half point above, the high for the day, which is kind of classic because everybody would have moved their stop. Either their stop's kind of sitting, if they've entered here, a point, point and a half above, kind of right here, or as soon as this trade moves in their favor, they've moved the stop to break even. So punching these stops just here with that little professional bar, it's just classic activity. It's like they know that there's all these stops sitting there. They hit them, knock them out, and the trend continues in the right direction. So these kind of moving to break even, I think again is just, if you got the trend direction right, just sit on it and wait for either one of these kind of pro signals or the magic 4 points to get hit. Similar point down here. I'm not sure you could have entered here, but as soon as you saw this kind of activity at the bottom, maybe you'd entered here or here as we kind of came back into above the 1300 levels, psychologically kind of key. Again, the market comes back and just knocks out those stops that have been sitting there, have been moved to break even or whatever. So this kind of moving stops to break even after trade moves in your favor, again, just watch out for that. Personally, it's not my thing. Lastly, just to talk about trailing stops here. Now, a little bit of color on this chart. Let me try and explain what I'm trying to say here. Again, what I'm trying to illustrate is these pro signals where we get these professional bars at extreme exhaustion buying and selling. So this would be kind of an exit of a short trade. It's actually a trade I took and I exited almost there with the professional bar and exhaustion selling at this time. Now I've just put in the canned indicator in TradeStation for the ATR stops. This is an average true range stop, and it's kind of just kind of catching these trend moves and so on. So let's say you're using something like that as a trailing stop, which is kind of classic technical analysis, using some kind of average true range based trailing stop. I've got out of my trade here on this professional blue bar on this downswing, and yes, your trailing stop has followed you all the way down to these 1292 types levels, but when the first time that that your trailing stop has been hit is around here at this level, and at this level I was out anyway 10 minutes beforehand. So why sit through this extra trouble, and this bit in particular, which is psychologically tough to take, when you could have been out on the downswing rather than sitting through a trailing stop? It gets you the same amount of money, and psychologically I think is harder to live with. Yes, there are times when you get onto screamers. Now, in this consolidation phase, I actually went long back here. I did hold it, and assuming you were holding and taking out using an ATR kind of stop, you'd have been out kind of at the end of the day. But again, look at where that stop kind of gets hit. It's at this level here. It's not that much further above where I was at on my profit target, and you've had to certainly sit through time. And time is risk. Time that you've got to trade on in the market is actually at risk. Money is at risk. Whereas I'm out of the market here and flat for the day, so I'm not risking anything at all. This down move here, here's this kind of pro signal where we have exhaustion, professional blue bar just here. Let me just widen this up a little bit. There's that professional blue bar and the exhaustion selling signal. Yes, the ATR kind of stop kind of keeps you in the move a little bit, but you're out here. The break of that ATR line is up at this level here. I've already got out. I'm ahead because I've probably taken an extra half point there of profit, and I've not had to sit through the little retracement and the psychology of this kind of retracement move here where I'm losing money and I didn't get out at the extreme here. And then last example, just on this pro signal here. Again, exhaustion selling, professional down bar at this point here. The ATR stop kind of keeps you moving down, but again, the signal for the ATR stop, and it didn't take you out there, clever ATR, it took you out here, which is exactly or a little bit worse than where I'd have been out either at my profit target or at my professional signal here. So again, trailing stops, they're nice in theory and they look great in books, and the coding of them, the optimization of them, you can really go to town. But honestly, psychologically, I think they're difficult to trade with, and at the end of the day, I don't think they earn you any more money, which is why I'm not a fan. So, end of the day, I have quite a simple approach. 4-point profit target because the moves are 8 to 10 point. 4-point stop because everybody else is using 1 to 1.5 and they're getting kind of taken out of the market all the time. I'm using a 4-point stop. The professional signal with the professional bar and exhaustion selling and buying signal together is a really strong pattern for a great place to get out on an extreme, and it's usually easy to get out there because the trend is in your favor and you've got kind of the order flow kind of working in your favor, so the slippage that you have on orders is extremely small. Last couple of points just to talk about kind of gut feel and exits. Obviously, if you get a reversal signal and something goes the other way and you're in a trade, you reverse, you get out and you go the other way. That's kind of taken for granted. The other kind of point is, if the trade doesn't feel right, the market's slow, if you get a half point or a point in your favor, it just doesn't feel right, get out. No reason to stay in. Even if it's a 1-point loss and you don't feel good about the trade, much better to take a 1-point loss, sit back, look at the charts, look at the signals, and then kind of enter when you're more confident. And so last point, just to talk generally about kind of the psychology and the fear aspect of this, because Ron was saying, this for him, this kind of exiting is all about dealing with the fear of losing money, the fear of losing money, that a winning trade kind of turning into a losing trade and so on. For me, what I'm asking myself all the time in a move, when I've taken a trade, is, am I fighting the trend? If I'm fighting the trend, I'm probably wrong or I'm early. If the trend is going in my favor and I'm not fighting the trend will be my friend. Eventually it'll work out. We'll get a professional bar with a pro signal. The 4-point profit target will be hit eventually. There's going to be a little bit of volatility on the way, but if I've got the trend direction right, that volatility will be in my favor and the volatility against me will be very small and minor. So dealing with the fear is actually countered by having the trend in your favor. So as you take a trade, as you're in the trade, ask yourself, do I feel as if I'm fighting the trend with this? Am I trying to be too smart, a little bit too cute? Am I trying to pick a top? Am I trying to fight the trend and say, you're idiots, I'm Einstein and I know exactly where this market's going to turn and that's where I'm entering? If you feel like that, if you feel like you're kind of fighting against the trend, then best just to exit and watch. But if you feel as if the trend's working in your favor, then the trend will be your friend and you'll get your targets hit and you'll make those profitable trades. So there we go, just my thoughts on exits. I'll try and write this up a little bit into a bit of a feature article so it can be useful for future reference, but keep it simple. I wouldn't try to do the cute stuff, the trailing stops, the break-even stops and so on. I keep my risk reward 1 to 1, 4 points, and keep it simple. So hope that's helpful to you, and good luck with your trading.